Hi, thank you for coming to our session. My name is Suvik Das, and I run the professional services organization at PayPal. We're going to talk about recurring payments with PayPal today, as is the topic. And my co-presenters today are going to be Steve Woloshin, Senior Manager within the professional services team. And I also have Cynthia. She is the founder and president for Kachingal, and she's going to have a little demo at the end of the presentation. And then we're going to wrap it up with a set of Q&A. So the agenda, we're going to talk a little bit about what is recurring payments. This is a product that we have in PayPal. We have live in PayPal for the past few years, about 4 or 5 years now. This is a getting started track, so we won't go too much into the weeds. There is a little bit of an in-depth session, a more in-depth session tomorrow at 1 o'clock. It should be in your handouts, and that's the session where we're going to talk about specifically about the various different APIs that we have in the product and how to actually integrate with the product. So we're going to keep it at a very high level, define what recurring payments is, PayPal product overview, and some of the typical use cases that we see in the marketplace and some of the merchants that have already integrated with these products. And finally, we'll have a live demo with Cynthia coming up. So as I was saying, recurring payments is a product that we have had live for about a few years now. It's a product by which, if you're a merchant, you could use it to collect multiple payments from your customers. So if you have, for example, a weekly video blog for which you are selling subscriptions, or if you have, you're selling furniture and you want to allow your customers to pay in installments, this is an opportunity that allows. This is a product that can be used to pay in installments as well as in the weekly video blogs. So it's a way to bill your customers on a periodic basis. And there are various different use cases that we'll talk about. For example, if you're buying a top-up amount for your prepaid cell phones, you could use this product, and various other different use cases. A little bit on the model for recurring payments. When we talk about recurring payments, we think about two different ways of billing your customers. One is when you have a fixed bill, a fixed billing cycle over a fixed period of time. Great examples are monthly subscriptions, or weekly membership dues, or fees, or insurance payments, and things like that. In this case, what happens is, you as a merchant will set up what we call recurring payment profiles within our system, within the PayPal system. And we have various different APIs that allow you to set these recurring payment profiles. Once you set a profile with us, you will be given a unique profile ID, and then you can use that profile ID to make different changes to the profile. You can update the profile, you can cancel the profile, you can do various other things. The recurring payment profile API has a bunch of different parameters. You could set up trial periods where you could do different kind of payment amounts within the trial periods. You can also set up things like the actual payment period, how many billing cycles are going to be in their payment period, and so on and so forth. So the API is fairly flexible. And you can actually read about it on our website, x.com, if you look for recurring payments. That's the fixed amount, where, again, it's a fixed amount and a fixed time period. The second use case for the recurring payments profile is really a variable model, where the amount and the time can both be variable. In the first case, it's fixed, so PayPal actually manages the payment processing. So once you set up the recurring payment profile with us, we actually take care of charging the customer's funding instrument, whether it's a credit card or the customer's bank account or balance, at periodic intervals. So we have a batch process offline that kind of manages the payments. In the second use case, which is variable, you as a merchant are going to make the payment APIs that are required to charge your customer. So the flexibility is with you. You can control the timing, you can control the amount, you can control the payment periods. So it's a little bit of a different model. Depending on what use cases you prefer, you can use these two different models. So with that, I'm going to turn it over to Steve. Steve's going to walk you through the various different products that we have that exposes these recurring payment APIs that you can use. Steve?
Thanks, Susan. Hi, guys. So, yeah, we're going to talk through several products that deliver both the models. And I'll talk about some of the typical use cases you might see or typical applications that could be developed using these types of payment paradigms. So the first one is Website Payment Standard. If you were here from our earlier session, you know that this is a fairly straightforward way to integrate PayPal into your solution, typically on websites, using HTML or post information. The feature we're talking about is either subscriptions or a fairly new feature called automatic billing. The payment method could be credit card or PayPal. And the subscriptions is really a fixed model. Again, so it's sort of a set it and forget it. You tell us how much to charge, how often to charge, how many times to charge. There's a trial period component as well. But basically, once the user comes to PayPal and sees those terms repeated in PayPal and agrees to it, we'll manage that business logic going forward and just let you know that you had a successful payment or you had a problem. Again, it's a profile that we keep on file. There's no vetting requirements in the sense that you don't have to necessarily have a merchant account or go through a special vetting process to do that. Automatic billing is kind of a hybrid or an advanced case of subscriptions. And automatic billing lets you set up a little bit more flexibility. And the typical use case might be, let's say you have a home cleaning service, and maybe they're coming every Friday to your house, and the first, second, and third Friday of the month they're just doing vacuuming, and maybe they're dusting and tidying and cleaning the kitchen for you. But the last week of the month, maybe you want them to do like a deep cleaning of your carpet, or maybe they're going to do laundry. So so maybe you're paying them $75 a week. But the last week of the month, you're going to pay them $150 because they're doing twice as much work. So automatic billing can give you options that either you can control or the payer can control of how much they'll pay this time. So it's a very interesting use case and allows more flexibility. It's worth taking a look at. And then we have Express Checkout. Again, this is sort of our flagship for web checkout. But we have recurring payments, and we also have reference transactions. So recurring payments, again, is the set up a profile, let us know the period, the number of times to fire the transaction, and the dollar amount. You're going to set it up using API calls, and as Suvik mentioned, you can adjust it with API calls. In this case, it's considered an advanced feature in the Express Checkout paradigm. So you'll need a PayPal merchant account, and you'll need to go through an underwriting process. And the reason for that is that if we're going to essentially allow you to charge someone's account without that person being present for subsequent transactions, there's potentially more risk in the system. So we want to make sure that we understand what your business model is, what your business dynamics are, and then approve you for using that more advanced feature. In reference transactions, rather than a profile, we're going to set up something called a billing agreement. Now, so at the beginning, it works in a similar fashion where you're going to present the terms of your recurring billing model to your customer. So you're going to say, hey, you're going to come to my site and you're going to set up an agreement where I can charge your account in the future. Let's say it's for top off of an account. Maybe it's virtual currency or poker chips. And anytime you have less than 100 in poker chips, you're going to automatically rebuy another 500 in poker chips. So in this case, since it's not a fixed period, the trigger event doesn't happen until that user has depleted their poker chips. You will have to track what their balance is, and you will decide when to fire off the next transaction into PayPal. By setting up the billing agreement, the user will see that they're giving you permission to charge their PayPal account sometime in the future according to the conditions that you established. We'll give you back a billing agreement ID number. You can kind of think of that as a special credit card number or account number. So the next time you're going to request a payment against that buyer's account, you'll send us that billing agreement ID as a reference, which is why we call it reference transactions. And we will then look up the terms of that billing agreement, note that it's still current and fresh, and allow the charge to come through. And while I'm talking about billing agreements and profiles, another dynamic to think about while you can adjust it and you can see these things, the buyer can also see the presence of these agreements in their PayPal.com portal. So one of the consumer advantages is for consumers who are reluctant sometimes to enter into a recurring billing paradigm because they're not quite sure, how do I cancel it, how do I turn it off? Certainly you'll have a methodology on your site where they can contact you and say, listen, I want to stop doing business with you. But they can also talk to PayPal and say, I'm going to unauthorize future transactions. So they can effectively cancel the pre-approval record or the billing agreement record in PayPal. If that happens, when you try to submit the next transaction, we will let you know that that billing agreement is no longer valid. So all of these have that dynamic where there are effective consumer controls as well as business controls to manage the ongoing relationship. So we also have Website Payments Pro. Again, recurring billing and reference transactions, so both models here are supported. In this case, we're talking about accepting either credit cards or PayPal as a payment type. And again, the fixed or variable model depending on what your business use cases are. And once again, we'll use either profiles for recurring billing or a billing agreement. API-based solution again, so you use APIs to set up the record, use APIs to configure the billing agreement. The consumer has to come to PayPal to agree to it. And then again, you get back an ID number that you can use. And again, since these are more advanced features, there'll be some vetting or risk underwriting required to support them. On my use cases here, someone told me they didn't quite know what these little purple things are. So that's Friday movie night. So we're going to download a movie every week. Come on, guys, it's clip art. It's hard to work with. But that's downloading your movie of the week so your family can get together and watch movie night. In the top cases, let's say it's a printer supply or supply replenishment. So maybe you're going to be selling toner cartridges for various printers and paper, and you'll want to allow someone to come in and order new supplies. But generally speaking, they're going to order the same toner cartridges or same paper. It's just a question of how many they want to order that time. So you could use reference transactions for that so they don't have to go back into PayPal every time they want to replenish their supplies. No love for the clip art? No? Okay. So Website Payments Pro, recurring reference transactions, and then Payflow Pro. So again, similar solution, but in this case leveraging our Payflow gateway, where again we have recurring billing and reference transactions. In the Payflow Pro, the tool you'll typically use is called the Payflow Manager or the V5 Manager that lets you see your recurring billing profiles on a web portal. In this case, the recurring billing profiles actually live in our gateway rather than in PayPal, and so you manage it from that. Small nuance, but just so you understand that slightly different control point for it. Functionality is essentially the same. You can use APIs to update the profile, or you can also go into the profile in your manager account and make changes to it there. A typical reason for doing that, particularly if you're doing credit cards through Payflow, maybe that user's credit card expires and they have a new card, and you want to establish a new card, so you'll update that profile with the new credit card number and then use it. Billing agreements then on the PayPal side would work the same as it has before. So we'll maintain the back end of that, or what the funding instrument is going to be from the user, but you'll maintain that billing agreement ID and submit that in for the next transaction that comes through. And then we have adaptive payments. So adaptive payments has a feature called pre-approved payments. And the idea here is, again, you'll set up an agreement between the sender and the receiver or receivers of that money that they're going to allow their account to be charged sometime in the future based on some trigger mechanism. Again, the developer or the business is going to determine and maintain the business logic to decide when the next time is to fire a transaction based on some trigger criteria. And that could be hitting a minimum balance on a top-up account. It could be replenishing supplies. It could be every time they've read 5 news articles, you're going to charge them in advance for 5 more. Or for that matter, you could do a fixed model using the approval payment. You could decide on someone's going to do it every month for $9.99, but I'll control the logic. And maybe, if the first of the month falls on a holiday, I'm going to wait till the next day, or you're going to do some other logic like that, so you can maintain a finer tune on the logic for when that transaction will fire off. So you get a lot of options to look at. So let's look at a couple of examples of the fixed and the variable use case. So we'll start with the fixed model. Let's say you're a business giving out investment advice. I don't know the wisdom of giving out investment advice in these times, but let's just say you're going to do it because you know more about investment than I do. And maybe your vehicle for delivering that is a weekly video blog. So you're going to allow people to sign into your site with a user password, get your latest and greatest steals and deals for the greatest stocks or funds around out there, and you're going to charge your customers $9.99 a month to have access to the site. So you might use website payment standard subscriptions for that, where they'll come to your site, they'll say, you'll give them a little teaser of some of your sage advice on investing. You'll show them how amazing you are and how many millions of dollars you made in returns, and they'll absolutely have to have your advice, and they'll want to sign up. So you'll hit a button that says subscribe. The buyer will go off to PayPal, and they'll see, hey, okay, video blog for investment advice is going to cost me $9.99 a month. It's tax deductible because it's part of my investments, whatever justification they want to make. They'll agree to that. They might pay by credit card. They might pay by PayPal. And they'll come back to your site, and we'll send you back a message that that subscription has been established. Now you can give them either the secret URL or the secret password or whatever trigger you want to have to allow them into the content, the paid contents part of your site, where they can review this week's blog or previous blogs. This would be useful also if, let's say, you know, it's a weekly blog, but maybe you want to do holiday specials or instant updates in the middle of the week, and you don't want to necessarily have to charge for that extra content. So by setting up a subscription, you're just going to give people access to your site, and you can control the content that gets delivered. So let's take a look at a variable use case. This is one where maybe it's not really a set it and forget it type of thing. And I mentioned printer supplies before, so let's look at what that might look like. So let's say you want to be you know, the discount printer supplier in your space, and you've got the line on toner cartridges or refilled cartridges or special inks or special colors. You've also got a variety of papers for inkjets and laser jets and things like that, and you know you've got a good niche for selling supplies in this market. So you'll bring people to your site, you'll convince them that you're the supplier of choice, and you'll set up, in this case, perhaps you're going to be selling toner cartridges for $8 and reams of paper for $9. You might use Websites Payments Pro reference transactions. So you'll establish a billing agreement that says something to the effect of, you know, you agree to let us charge your account whenever you order supplies. You'll tell us how many toner cartridges you want, how many reams of paper you want. You can get more complicated and have different types of toner, different types of paper. You can have other types of supplies too, but basically you're just going to explain that these types of things are available. You'll send them off to PayPal. Well, they'll agree. You could, in this case, have them set up the billing agreement without actually making a purchase. So they could just register, basically, and say, yes, I want to be a customer of yours and buy supplies. I don't want to buy anything today. I just want to come back later and do this. We call it a billing agreement without purchase. And we'll go ahead and set up the billing agreement and give you the number. Or you could set up a billing agreement with purchase, which means I'm going to order today maybe 2 cartridges and 2 reams of paper. Here's the dollar amount, and I'm also going to give approval or permission for you to charge my account in the future for the next order. And in that mode, we'll give you back the billing agreement, and you'll have that available. So those are 2 sort of use cases for that. What I really like to see is a demo. So we're going to ask Cynthia to come up, and this is Cynthia Topaldos from Kachingal, and she's going to show you a really cool and interesting application of using subscriptions. Hi, Cynthia.
So first I want to ask, how many of you have heard of paywalls? Yes. So we're pretty much the antidote to paywalls. You might call us the anti-paywall company because we actually don't believe in paywalls. Well, certainly they can work in some cases, but we believe in general that there's a new business model evolving, which is people voluntarily paying for free stuff online. Sounds very radical, but we think that the industry really needs a new model because, you know, paywalls, it's kind of open versus closed. And some of you that might be following the media industry know that there's a kind of a raging battle going on between whether news organizations should be putting up paywalls or not. And in fact, those of you that are on Twitter, which is probably most of you, if you type paywall into Twitter, you'll see that there's just been a lot of activity around paywalls recently. The London Times just accidentally lost their paywall this morning, and everyone went kind of crazy. So that's kind of the background of what we're doing. We're also not only for content organizations, but we're a great tool for applications that would like to monetize without putting up a paywall because we're a voluntary contribution system. So let me go to our demo. And I'll show you how this works on how Kachingal works for a content site. And one of our sites is the Boulder Daily Camera, which is the regular newspaper in Boulder, Colorado. Is anyone here from Boulder? Okay, good. What you see here is the Kachingle medallion, which they put on every page. This is a JavaScript widget. Our JavaScript engineer is here. This is Sharon. Also, let me just introduce a couple other people. I have Frank, our CTO, Frank, and Rob, who's our QA engineer. So basically, you as a user, whether you've got an application or a content site and you don't want to put up a paywall because you don't want to cut out 90% of the people, you put up the Kachingle medallion and users mouse over it and they go, oh, well, what's this? Well, in this case, you see 30 people are supporting the site. I think I'll join. And what I say here is that it's only $5 a month to become a Kachingler. So we're really into the micropayment scene, as you'll see shortly. We do use the subscription capability of PayPal, and it's $5 a month. So let me just go through this step, which takes a few moments.
But it's really cool.
Go ahead.
That's really cool.
So I've come through the daily camera because this is the site I want to support. I've just done a very easy registration here. I'm waiting for the registration to come back. Now we do the email validation, which is important, as you probably all know, to make sure that the email works. There it is. So I just wanted to go through these steps. I know they're kind of routine, but to show you how the PayPal step works for us. Okay, so now I've come to, as a user, I've now come to the step of signing up for PayPal. Now, I'm just going to tell you some of the things we've learned. As you can see, we have two opportunities here for the user. The regular subscription at $5 a month, and then the 30-day trial at $5 a month, right? And we are actually, what we learned is that people, even for $5 a month, they want to know what they're getting into. So we've got Michael. Michael's one of our engineers, who is actually implementing the subscription capability after they have a month of a trial. So that's one thing that for those of you that are doing something like this, you might want to consider is to put it afterwards. What we found is people would stop here because they're just not sure, well, I don't know what this is, and we were finding a hesitation. So, but I do know what it is, and I love Kachingle, so I'm going to subscribe. So, of course, I go to the PayPal sign-up page, and I sign up for PayPal. I'm sorry, what? Oh, thank you. This is all in my computer. I have to use this other one here. Okay, so I'm logging into PayPal. And I'm going to authorize to do the subscription of $5 a month. I'm going to do this, and I'm going to wait a minute because I know PayPal's been kind of slow. But one thing that we really absolutely love about PayPal subscriptions is that they're very user-centric. And I really, as I was telling Steve, I really wish PayPal would make a bigger deal out of this because, you know, when you sign up for a subscription through a credit card, it can be very, very difficult to cancel it, right? You have to go to the credit card company, you have to go to the other company, and they fight with you and, you know, all this kind of thing. Whereas, of course, you can cancel Kachingle through Kachingle, but you can also just go to your PayPal account. And I think that this user centricity is really an important feature, especially moving forward where everything is becoming more and more user-centric. Okay, so now I've come back to Kachingle, and because I signed up through the daily camera, you can see that I've made my first visit there. I'm starting to contribute to the daily camera. And I'm, you know, really happy about that. And if I go to the daily camera site here on Kachingle.com, I will see that they have 32 Kachinglers, and they've made $183.28 in payments. I can actually see all the Kachinglers. The newest one is me, Cynthia PayPal X, because we're a totally transparent system financially. We call this crowdsourced auditing. You can see every payment that's been made, that you've made, and every payment that everyone else has made. You can be anonymous, but you can still see your payments. And if you look here at the payments to the daily camera, you can see that some people are sending all of their money to the daily camera, all their $5. Some are sending some of their money, like $2.50 from Kathy Black, and some like, let's see, let's go down to here. This is me, the real me, Cynthia, the chief Kachingler. I sent 12 cents. So we're down to the level of actually people being able to pay for a penny. And let me just explain how this works. What we do is people pay in their $5 a month, and then we distribute their money once a month based on their activity of the sites that they've selected. So you have to go to the medallion, you turn it on, and then we track that. So let's say you went to the Daily Camera every day of the month, and you went to steveouting.com every other day. The Daily Camera would get 2/3 of your money, and steveouting.com would get 1/3 of your money. Of course, that's minus our 15% transaction fee, which is 15% split between Kachingle and PayPal. Is there any questions about this? Because I want to show you something else now, which is, I'm going to log out of this. Yes, please. I can't hear you. Could someone repeat? That's a good question. Our initial algorithm is a very simple one, which is it's just daily visits. But as time passes and we get more feedback, we can change that. It could be, it's just meant to be a proxy. And remember, at $5 a month, it only has to be good enough, you know. So what I want to show you, though, is many of you probably have applications, and maybe some of these are free applications and you would like to monetize them. So it's very easy to install Kachingle on your site. In fact, it takes usually about 5 minutes if you're slow. I'm going to show you how to do that right now. So this is my real account, and I own a bunch of sites that I manage. One is my blogging on the Kachingle blogs. You can have multiple authors have different Kachingle medallions if you have that kind of situation. You may recognize this dog. This is Bunny. He's our mascot, and there's a big picture of me out there with Bunny. So be sure to check it out. So here I have set up myself with a medallion on the Kachingle blog, and also I'll show you how you can install this medallion. It's very simple. Just a few fields. You give it a name, URL, description, and then you grab one of these medallions by simply choosing one of them, getting the HTML code, putting it on every page of your site, and you're done. Okay, I'm just about done. The one other thing I want to show you is that we also, of course, keep track of all your payout history for your site, and this is where I'm showing each payout that happened. We pay out at $3.35 each month, which is the price that it used to be of a ice grande latte at Starbucks is now $3.45. But we're able to bring in $5, distribute down to the penny level, and then pay out at $3.35 using PayPal, both on the front end and the back end. So the thing I don't have time to show you, but I'm going to mention, which is very exciting, is we've also launched Kachingle X, which is a browser extension so that you can Kachingle sites that have not signed up for Kachingle yet. And this is the New York Times blog. They're about to put up a paywall. And you can actually come to Kachingle, sign up for Kachingle, and start giving Paul Krugman money. Okay, thanks.
Great, thank you. Okay, so thanks very much, Cynthia. I think this is cool. So let me just see how good I am with a touchpad. So, did they give us a summary? They did. So that's our presentation. We really want to take some questions from you. We've got some links up here for more information in our emails. But I hope we've given you a good sort of overview of the possibilities for doing subscriptions and recurring or reference transactions on our site. As Suvik mentioned, there's another session tomorrow that goes into into the weeds on the tech side, so you can really dig in from that. But we appreciate your coming, and we're here to take some questions, and thanks very much. Do we have mics going around? So we'll start with this gentleman in the back in the green shirt.
So you talked a little bit about variable pricing and reference transactions. I mean, what are the limitations around this? Because it seems like is it cookie-based? Is it available on multiple devices? Because I know we've talked a lot about mobile. What are kind of the limitations around reference transactions and the best ways to use them?
You want to take it?
Sure. I don't know if you're talking of technical limitations or from a policy vetting point of view. Okay. Okay. So the reference transaction product essentially is an API-based product. So once you set up a transaction with us and create, we give you a transaction ID, and you can then use the transaction ID to make API calls, and we have a specific API call called do reference transaction, where you pass that specific transaction ID into us. And you could basically call that API from any sort of endpoint, whether it's your backend server, whether basically any programmatic interface can call that code. That's from a technology point of view. Now, from a policy point of view, reference transaction is a vetted product, so we don't allow, and that's mainly because of risk and compliance and legal reasons. So in order for you to get reference transaction, you have to go through a vetting process. So that's the limitation that I'd like to mention.
Okay, I think we have a question on that side first, and then we'll get back to this side. So why don't we?
Do you support subscriptions with an upfront trial period before billing?
Yes, we do. Yeah.
And I think we had up here, and then we'll get back from that.
So you mentioned about the Kachingal had a requirement, in which they wanted to support the free trial and then the billing. Something what we also call, we have kind of a similar requirement called delay billing, in which you want to give 30 days free and then the subscription automatically starts after 30 days. Are there any plans to support any kind of delay billing, something like that?
Did you hear the question?
Yeah, so your question is there, instead of a trial period, is there like a delayed billing?
Right, which is essentially really a trial period, yes.
So we have
days.
Well, we call it trial period functionality in most of those products. So you can, from the subscription side. So the idea is that you'd establish the relationship, you'd establish the profile, but the first transaction wouldn't be assessed for some period of time. That could be 7 days or a month. On the reference transaction side, that trial period is completely controlled by you. So you would still establish a billing agreement, in this case without purchase is the term we would use. And then when that trial period expires and you want to initiate the first charge, you would do that. You would call that do reference transaction call, submit that billing agreement ID, and we would look at that as the first of the recurring transactions.
But is it automatic, or it has to be the
It's
first
automatic on the
transaction
profile
has to be
side.
Okay.
It's user controlled, business controlled on the on the reference transaction side. So again, this comes back to our fixed model versus variable model. The fixed model, we drive the logic. So you give us the data points, and then we'll drive the logic automatically. On the variable side, we just establish the framework where you can charge that account again, and you control all of the logic that decides when the next charge comes in and how much it's for.
Okay. Okay.
So I think we're back to that side.
Yes, thank you. So for the non-vetted options, can you talk a little bit about the user experience? If I want to go with the subscription-based non-vetted, is the user involved every month having to approve the transaction,
No.
or is it on autopilot? So both
Yeah.
of them are on autopilot. So there's a subtle difference there I'm not totally getting between the recurring and not, because with the recurring, it sounds like with the non-recurring, the user has control to revoke, but they also do with the billing. What's the?
So it's a good point to differentiate. So in both of the scenarios, in the profile or the fixed logic, and the reference transaction, which is the variable logic, the user goes to the PayPal site to sign up and agree once, and then never has to come back. Vetted or not vetted. Either way, the next time it's time for you to get money, that happens without user intervention. So the whole magic of this is the user doesn't have to come back to the site and approve the very next payment. it's automatic. Now, whether we have logic that says, up first of the month, time for you to get your $9.99, and we fire a transaction and send you money, that's the fixed model, because you've set up the profile. Or you've got logic running on your site that says, oh, first of the month, I want my $10, so I'm going to send off a transaction into PayPal with the reference information, and I'm going to drive that, and I'll get my money. Either case, the user doesn't have to come back on the site. He'll get a notice, and he'll see it in PayPal.com after it's occurred.
Why have the vetted model? It sounds
so
like
there's some differences in the way the application is approached, and there's some differences in the way the billing logic works, in the sense that the use case for the subscriptions model through Website Standard is typically smaller businesses that don't have as much complexity in their payment model. So in either case, we have fraud monitoring and fraud models that look at every transaction. But the reference transactions in the API-based model typically is used by businesses that have a higher volume of transactions and dollars coming through. So as part of our due diligence to maintain integrity of the payment system, we will ask those businesses to go through a vetting process, just so we understand who the business is, who the principals are, the business are. So we always have to be prepared to answer back into the financial institution world who has liability, who's responsible, who are the people that we're doing business with. Okay. So that's just part of our due diligence as a money transmitter and playing in that space.
Okay, and then one more detailed question. On the non-vetted accounts, the user can sign up for a subscription with or without PayPal. If they have just a standard credit card, they can do this as well. They don't need a PayPal account.
They don't need a PayPal account if they're going to use credit card. When they go to PayPal.com, there's a radio button that says, I have a PayPal account, and there's another radio button that says, I don't have a PayPal account, I want to use a credit card. So the user will pick which path they want to use, and you'll get the money either way.
But they still have a profile, don't they, even for the credit card, because they have to be able to revoke their agreement, right? So if I come in cold and I want to go ahead and subscribe to some video blog, and I want to use a credit card.
So yeah, it's a good point. So with the PayPal account, they'll be able to see the pending agreement. Without that, they'll get the emails that tell them that a payment is fired. Yeah, so that's a good question.
So let me answer that question. So let's say you are a merchant that has this video blog, and I as a consumer like your video blog and want to pay you $9.99 every month, right? And you want to charge my credit card on a recurring basis, right? So I give you my credit card number and all the information, with the credit card number. And I also tell you how much you can charge me and how often. So that's somewhat controlled by you. And then you can actually make an API call into PayPal. There is an actual API call called Create Recurring Payment Profile, where you pass that funding instrument, which is the credit card with all its information. And then I, as a consumer, don't actually know that PayPal is the money transmitter at the back end. I just see my credit card charged every so often. If I have to cancel my subscription with you, I have to talk to you directly to cancel it. So that's...
Yeah, so I guess the fundamental difference is if there's no PayPal account, then there's no canceling through PayPal.
Right.
So that option is not available in that scenario. So that's a good clarification.
You'll still give me a key as a merchant. We'll still do the back-end billing for me.
Yeah. Right.
Just repeat the question so that everybody can hear.
Yeah, so the question was, you'll still give me the key or the reference ID as the merchant, and you still will control the billing. That's correct. I think we got a question in the back.
With the billing agreement, you said that I would know if someone canceled the next time I went to actually try to get money. Is there a way for me to call the API to know if it's valid before then? Like if I'm doing a monthly service, I don't want to wait till the end of the month to find, I've provided a service for the month. Now I'm going to accept payment.
So there are APIs to update a profile. I don't think there's an API to check status on billing agreement. I can check, but do you know if there is one?
So let me understand the question. So are you saying that is there an API to check the status on the profile or
on the billing agreement? If I set up a billing agreement and at the end of every month I'm going to charge the user based on usage, we have that agreement. But if I'm waiting to the end of the month, at any point they could cancel, and then I would go to bill them. They'd no longer have an agreement. Is there a way for me, like during the month, to validate that that agreement is still exists.
Yeah, so there is I forget the exact name of the API, but I think there is a get recurring payment profile or something like that, where you pass the profile ID and gives you status update, whether it's expired or canceled or, so yeah, there is a get recurring payment profile API.
I think we also have, we at Jingle, when somebody cancels the profile, we get an email.
That's right, yes.
Repeat that.
So, right, so the comment was when someone cancels a profile on PayPal, then the merchant gets an email or an IPN. Is it an email or an?
We may get an IPN as well.
Yeah. So it's an email and an IPN, I think, if the merchant is willing to accept an IPN, that we send to the merchant that there is a cancellation.
Okay, I think we have a question.
Yeah, it looks like the reference transaction style of recurring and the pre-approval seem very similar. Can you characterize the distinction between those?
I'm sorry, I didn't get the question. Reference transaction and?
Yeah, it was reference transaction, and then if I just use the APIs to use pre-approval, get a pre-approval key, and go that way, are those?
Right.
What's the,
so I think there are some subtle differences, and Steve, feel free to jump in. The pre-approval payments capability is a little bit more flexible in the sense that you could actually, you can actually allow a certain maximum amount in the pre-approval. You could also specify a certain period of time for which your pre-approval is valid. And reference transaction does not have those sort of controls yet. So pre-approval is a little bit of a more recent product and has a little bit more controls built into it.
Yeah, the other thing is part of it is just an artifact of the fact that the pre-approvals is part of the adaptive platform. And so different nomenclature, but essentially they do the same thing. There's a little bit more to Suvik's point. You can message to the consumer if you want to put limits around that pre-approval. You can message that and they'll agree to that too. The billing agreements are assumed to be open-ended. But otherwise they're really similar. The other dynamic that's different with the pre-approval on the adaptive platform is the idea of having a third-party caller to the payment, so you can have chain payments or parallel payments in that pre-approval mode under some conditions, right? It's complicated, but the whole, one of the key differentiators of the platform is the ability to support wider use cases by having the idea of an application caller who could be the sender, could be the receiver, or could be an additional receiver, or could have no monetization at all. So more models with that, and then the caller just controls when the logic fires. And I think we got time for one more. Why don't we'll do two more. We'll do this young lady in the back, and then we'll get you, sir, and then I think we're there.
If I had to present to the customer a different route, if I wanted to give them the option to do a one-time payment, or if they didn't, they just wanted to do one time versus doing a subscription-based model, is that something that I would have to design to just have two different types of PayPal routes, or is that something where PayPal could control that once we route them to that?
Well, so in a crude way, you could let PayPal do it because the user can cancel, right? Or you can cancel on the user's behalf. But you could write code that says, I'm just going to do a single payment today, and then maybe in the future when I encounter this customer again, I'll give them an option to sign up for reference transactions. Or you could just say, I'll do a billing agreement with a purchase today, and then get some confirmation from the user that they want to continue before you fire the next transaction. So I guess it's open-ended, really. It depends on what business logic you want to support and how you want to message the presentation of the interface to your customer. So kind of a long way of saying both, I guess.
Hi. I understand there's a vetting process for the reference transactions, and I was wondering what sort of criteria are used to determine whether a company passes that bar. Now, if I'm trying to advise clients whether they can go this route or not, are there any rough guidelines I can use?
So at a high level, I'll say it's similar to getting a merchant account from an acquiring bank. To go into the weeds, I can kind of go offline with you and talk to you a little bit more about it, but it's generally the same process as approving someone for a merchant account. So they want to understand your business. They want to understand that you're going to be in business. They want to understand who the principal owners are of the business. And it's usually all about, again, what happens if something goes wrong? Do we understand where we have recourse to recoup funds?
And is there expected timeline for that approval?
Usually it's a matter of days. but not always. It depends. It's kind of a slippery answer, but I'm not a vetting expert, so I can't really give you too much of the detail, but typically we try to look through those within a few days. We might have some additional follow-up questions, and then we try to deliver a decision back.
Okay.
Thanks, Don. I think we're out of time. So thanks very much for coming. We'll be around for a few minutes afterwards, and thanks. Great to see you all.